Happy Friday. Rates opened this morning down from last week. To be exact, 6.83 on the conventional 30-year fix, down from last week 6.92. However, that may be short-lived given the fact that we got a hotter than expected jobs report. So this week, we're going to cover on the jobs report what that means for the Fed, what it means for the markets, and then also tariff talk. There were some revelations overnight, which looks like it tamed the response to the jobs report this morning. And then I'll close with some tips for the week and specifically within rate windows. So let's jump into it. First and foremost, the highly anticipated jobs report. And this week was filled with tremendous data. And the expectation walking into this report was that it was going to print weaker than expected. So let's back up. This week, we got the first preview of GDP for quarter one, showing weaker than expected. Layering in on top of that, we got JOLTS, job opening and labor turnover, showing an uptick in job openings. And then we had also new job creations, not as strong in those preliminary reports, as well as ADP and the private payrolls. We saw a significant miss. The expectation walking into this report was this was likely going to be a miss as well. However, this morning, market was anticipating 133,000 new jobs created. Well, we blew past expectations, 177,000. Unemployment was expected to remain at 4.2. Well, good news is that it did remain at 4.2. This now draws into question as the Fed meets next week. It is very likely that the Fed will not cut rates, actually leave rates unchanged into next week's meeting. And that's got the market a little stressed as there's multiple factors showing to a slowing economy with GDP, labor, tariffs, you name it. Yet we had a jobs report again blow past expectations. So it'll be very curious to see what the Fed does next week. And yes, as always, we're going to bring it to you as it happens. Other big news, which ultimately I believe and the market believes is what's tamed the response for mortgage rates, was overnight. There's talks hitting the news wires that China is coming to the table. They want to negotiate with the US in regards to the tariffs. And if we look at the performance of the 10-year, which, as we know, is a leading indicator as to what mortgage rates will do, as that response hit in the overnight hours, the 10-year really retreated. And if we look at it at a detached level, the 10-year is back to levels before all this drama started with the tariff. So the expectation is if there is the ability to truly ink a deal with China and our other trade partners, rates hopefully will respond positively. So again, definitely an evolving situation, something we're going to continue to monitor in real time and bring you updates as it happens. So with that, we want to close with your tip of the week. As we know, lower rates present opportunities. However, like anything, the ability to time the market perfectly is almost, if not impossible. So, with that, what we're advocating for our agents and really the ability to set yourself above or apart from the group is having very, very direct consultations with your clients. Yes, we know rates drive a huge component of behavior, but what does the rate ultimately produce? It's a payment. So understanding exactly what your clients' payment goals are and being able to kind of navigate the product to associate with that payment despite rate volatility. Alerting clients when rates are moving. Like I give this update every Friday, there's other mechanisms that we can deploy on your behalf to ensure that you're being fully informed as to any and all rate movement as it occurs. And then lastly, ensuring that your clients' pre-approval docs are up to date. As we know, getting through the loan process can be cumbersome. The ability to have all that worked out up front puts them in the position to act and respond quickly. As always, we're here to support you. If there are questions, know that we're here. Feel free to reach out. And as always, let's make it a fantastic Friday and an even greater weekend. Thank you.